I wish I didn't have to see this today, guys, but we are diving into $500,000 of losses on ticker symbol WISH. Yes, Wish. So here we go. We are diving into Wall Street Bets yet again today, and we are talking about today, the day that this user is cutting the bags and is moving on from Wish. Okay, so this user right here, special afternoon, okay, 85. This user had put in over $730,000 into ticker symbol WISH, Wish. And now this person is taking the loss, taking this down $521,000, almost $522,000. Not that the extra $1,000 honestly makes a difference, right? Or extra $100. Who cares when you're losing $500,000? And moving on from Wish. I truly wish that I didn't have to see this, but at the end of the day, here's the chart on Wish. It's gross. I mean, it really is. Now, there's a lot of factors at play, which I want to dive into a couple of these things and kind of give my thoughts on Wish overall, okay? Yeah, under $4, that seems pretty low to me. It really does. It definitely does. But Wish has been a stock that going back into June, look at this volume spike. Back into June and July, really, we saw that, really June, we saw crazy volume. Wish wasn't trading that much volume. It was trading 15, 20 million shares a day. Then it goes from that to trading 200 million shares per day, even having days where it traded up over 325 million shares in one day. And in that process of trading that many shares, the stock went from $11.50 to about $14. Yeah, it's a lot. It's a pretty big move, but it's not like anything, too quick. It wasn't like 100%, right? Still a pretty big move. Now, this stock has pulled back. They had the earnings report, earnings debacle, pulled back hard. What I believe happened here with this stock is you had a lot of retail traders like you and me, who were all jumping in. Little talk on Wall Street Bets, a lot of talk on Twitter, a lot of talk on social media from some bigger name accounts. Now, at the end of the day, right, let's talk about these bigger name accounts. When you have these bigger name accounts with 100,000, 200,000, 500,000, some that have, crazy follower accounts that are very engaged that will buy anything that they say. They even just hint at something. If they say, I wish I was green, they might just buy Wish for all we know, right? Not even tagging the stock. So when you have that, now that's crazy in terms of the power that you can utilize, right, in your favor when you want things to go up. And some use that, some don't. Some are, honest traders. And ultimately, it's up to you to make that determination. But a lot of them won't get caught because a lot of them are just talking about stocks that they like, stocks that they own, and talking about what's going on. They're not talking about false information. They're not bringing up false stuff. They're not talking about all that stuff. And if they did, well, they'd be arrested for it. We talked about how you can get arrested for pumping. There's even a video on the channel if you want to go back a couple weeks that talks about how to not or how to avoid getting arrested for pumping stocks. And it's simply doing just that. It's not making false claims. It's not doing and saying false things about a company's numbers, earnings, this, that, their thing. So when it comes down to it, this stock was crowded with a ton of retail traders. A ton. That a lot of them, just because some accounts had made some pretty big calls, they got on board, and the power in numbers, right? Now, some people did really well, and if they had gotten in here, let's say under $9, they were able to sell this thing for up over 50%, over 70% returns within just a couple of days. Now, a lot of others were like, no, this is going to go to $50. It's going to go to $100, which is the next best company. Well, Wish definitely is not the next best company, at least as of right now. I'll pull it up. Here's their site, and they have a lot of products that they sell, but they're really crappy quality. That's just what it is. They're just not good quality. And they're looking to improve that going forward. And so this certainly could have potential in the day and age of social media, e-commerce that we're in right now. But the numbers didn't back themselves up over the course of the past couple of months. And that earnings report that came out in August definitely wasn't encouraging for people who were looking to hold this stock, at least in the short term. And that's what we saw, a big dip. Now, factor all this in, poor earnings report, factor in this stock being very crowded with retail traders. What do we get? We get overreactions, and we got overreactions to the downside. I believe that there was, to some degree, an overreaction to the downside. I believe this stock is definitely getting hammered. I think it could certainly be worth a little bit more than where it's at right now. That said, there's a lot of things to price in. There's a lot of things to factor in, and also market conditions. The market conditions as of late haven't been too great. They just have not. Now, unfortunately for this Reddit user, I would speculate that they may look back on this and say, I absolutely just sold the bottom. Maybe not, but I wouldn't be surprised if over the coming months that Wish at least floats back up and starts to push back up to some degree, up around maybe $5, maybe $6, maybe it catches some WallStreetBets attention again, maybe it goes for more, who knows? But this is an example of kind of cutting your bag, cutting your losses when it gets to be too much. And unfortunately, it was a huge loss. Now, ways to avoid this, obviously, hindsight 2020, cut it off earlier. Yeah, going into this, if you weren't planning on holding the stock long term, then yeah, you probably should have cut this thing off when it fell below or after the earnings. The way that I see this is that either you have a thesis and a conviction on the stock and you're going to hold that stock long term and that's it, right? Nothing can change that unless something fundamentally changes inside the company. The way I see it is that if I'm going to hold stocks through earnings, I may cut it after earnings. That is only if I see that earnings report, something doesn't look good, something outlook-wise, numbers aren't where I expected. That's where I'll say, you know what? This stock no longer is fitting in with my plan. But if new earnings come out and they seem good to you, or longer-term picture, longer-term view, things are still moving in that direction, and the stock's pulling back because it wasn't as good as everyone thought right now, that's many times an opportunity for you to buy more. So a lot of people get caught up in the situation where they buy because somebody else tells them to buy, and then they have no conviction on that trade because they don't actually follow the company. They don't really care. They're not diving into the earnings. And then it doesn't just go up, and so they're stuck holding it, and they keep holding it. And if they don't just cut it off at a certain stop point, or let's say, if I'm down 25%, I'm out, right? You could have done that. You certainly could have done that. If you don't do that, you let it go farther and farther down, and then the loss becomes so much that's like, what's the point of selling it now? And then eventually you get to the point of like, you know what, this is actually really, really bad. I got to sell this now. And then you lose $500,000. And that's what exactly happened in this case, it seems like. So the moral of the story in this example is if you're going to buy a stock, make sure you know what you're doing. And if you're going to buy it because somebody else recommended it, have a stop loss in place, have an area you're going to cut it off. Or if you're going to buy it and hold it long term, only sell it when it fundamentally doesn't make sense. You'll see a lot of times the market goes in cycles and you'll see a lot of mismatches. And so like the stock and the company seems to be doing good. Earnings are getting better and better and better, or they're a lot better compared to last year or last quarter, but the stock falls down, right? And that mismatch is generally a really good opportunity for someone who has some patience and can ride things out and can see things longer term. That's who's going to win. And that's how the market works. Transfer money from the impatient to the patient. That's the moral of the story. Hope that was helpful. Let us know in the comments down below if you're holding Wish, if you're a bag holder, if you cut a loss recently. I'm happy to hear you guys, as always, in the comment section down below. Luckily, I stayed away from that. Never really kind of got caught up into that. I think I traded it maybe once or twice, but I was not holding that thing very, very long. A couple of days max. Appreciate you guys. As always, links and resources down below. 2 free stocks with Webull, and also $5 in crypto for free if you deposit any amount on the platform. That link is in the pinned comment and description box. Also links to Moomoo. You get up to 5 free stocks with Moomoo, similar platform to Webull. Also public, you get up to like $30 or maybe even more in free stock value there. Technical analysis trading course down below if interested. Put that together with Joseph Hogue from Let's Talk Money. Awesome collaboration there. Hopefully you guys enjoyed that. Tons of good resources down below. And I will see you guys in the next one. Peace.